All right. Hi, everybody. Welcome to the Bullish Bears YouTube channel. This is Jeremy, and today I'm going to start the watch list without Matthew, but I'm going to add him in. He's just a little bit late on another call. He's a busy guy. He does a whole lot more behind the scenes than most people know. Anyway, I thought I'd start off with just a quick look at QQQ here, and a couple of insights we got to pay attention to in this. I mean, we're looking like a bear market, but it might just end up being more liquidity getting grabbed. We do have guys like Warren Buffett sitting on a pile of cash. Also, there was the real estate cancellation there. You kind of pay attention to that. Um, Lots of headwind in the market and lots of very critical decisions to be made by administration very soon. And I don't think this can's going to get kicked down the road. It's going to be really soon. So we have an opportunity here to break either way. And you really got to pay attention to the charts here because they're going to kind of be a precursor to what to expect in more ways than you think. So I always look to the chart because the news only tells me things that already happened. I can get ahead of things with the chart. So I've got a lot of activity in this trend, and you can see we found very key areas. All these little zones are just liquidity. So whenever we see something where it bounces off of liquidity or bounces through it, we get a little relief rally. So it's been pretty pertinent to just short the rallies. Well, now we got this giant bear flag hanging out here, and we're just under a critical pivot, that 485 level that we talked about a few weeks ago. That level is about half of this trend back. That's from this date here until this high here. So now that we're below that and we're consolidating into what looks like a bear flag, we do have a threat of breaking 467 down here, which is just another key area. Realistically, it's just a mark of the top of the gap here, but let me adjust it a little bit if I can. Later. The point is, we do have a critical area here, and if we're going to remain bearish, and this is quite parabolic in the bearish direction, you kind of got to be nimble and also be careful while taking advantage of some of the volatility. So we tend to scalp futures in the short-term volatility, but that's not for everybody. The buy and hold type are going to be getting pretty well beat up here, and it's a damn shame, but that's just the nature of the beast. It's the way the market works. All I can do is help teach people how to kind of protect their capital in this kind of condition if they're a long-term investor or buy and hold type, while doing pretty much all I can to take advantage of it too. I mean, I'm going to scalp that volatility. It's just going to be what I'm going to continue doing. It doesn't matter which way it goes. As long as it gives me range, I'm happy. But in the meantime, a couple of strategies to look into if you are even remotely educated on how options work. And it's like, if you've ever bought an option and sold an option, whether you profited from it or not, you learn a little bit about them. And I would highly recommend doing some reading and research on a couple of key strategies here if I were a long-term investor. One, I definitely want to know how the collar strategy works. I want to protect my capital at all costs, because if this flips bearish, you want to be able to exit the market smoothly and keep whatever you have before it ends up getting dissolved. Not saying the market won't eventually bounce. You could just stay right where you're at, and years go by and eventually you're back in the green. That's fine. But I'm always able to be aware of short-term volatility, so me as a buy and hold investor would of course do that. If you're looking more to be looking for opportunities here, as in you're just beginning to look for stocks to buy long-term to invest in, that's where things get even more critical, because we're in a fairly parabolic bearish trend here. It's pretty steep, and we're consolidating into what definitely looks like a bear flag. I mean, that's pretty textbook to me. Things are kind of in threat here. Now let's look at the weekly chart here. So we're well below the 50-week moving average, and we're below that key pivot, which is half that trend. We've kind of tapped into that critical pivot, which is a little bit lower, which is basically half from this low to this high. And we're making threatening noises. If this cracks, we got here, and we've got here. And that's very possible. If things are really going to melt down, that's where we're going. And I'm not going to stand here and be a chicken little and say the sky's falling, but I'm going to look for the possibilities and I'm going to trade the probabilities. So if you look into Matthew's mailer, the heat strategy, that's really going to help you here. Find some hedges and edges. And if you want to learn some option strategies that essentially do that with a different strategy, that's where you're going to want to learn. And if not, the market's going to teach you anyway. So I'm just going to say, be cautious here. We could go either way. We could have a nice rip-roaring rally. We could give half this trend back. All kinds of things could happen. Someone could pick up their phone and tweet, and things change in a heartbeat. So just be aware that we're going to be continuing.
Got safety protocols? Grainger has the safety pros to call. Shop our vast inventory of safety products at Grainger.com. Call, click, or just stop by. Grainger, for the ones who get it done.
I played soccer in college. Then one day I woke up from a coma, paralyzed from the waist down. And when I run, I think of people that are impacted by paralysis. My marathon is for the Christopher and Dana Ree Foundation. I know what it means to help them heal, because I was once there.
What would you like the power to do?
Energy prices are kind of getting to a point where they're going to start getting critical. We know that the demand on energy is going to be huge. And here we have Trump tweeting about, let's light the coal on fire and start making energy with that. That's awesome. Now we got BTU. Finally. TU. This looks like a really nice double bottom at the bottom of this trend. And it's got a short-term trend, half back 1630. And a long-term trend a little bit below half back because there's quite the wick here. There's liquidity there. Every time you see a wick, pay attention. $19.50 is a pretty good target for a breakout here. But first, we need to see if this is going to reverse. We need to see if the coal is actually going to light. And then it's got to be, moved from the mine out to the power plants, which doesn't take much. They just literally carved out of the ground, break it up, and ship it over. It's that fast. It's such an easy energy source to get to. Doesn't take long for this to turn around. Double bottom's pretty obvious. We do have a pretty good idea where resistance is right here. We can see we walked above it and then closed a candle in the after hours behind it. Kind of a news reaction. Now we're consolidated right at that resistance level. If this breaks out and confirms, it's pretty easy. Look left, find all of your inflection points. There's one here, there's one here, one here. You can short-term day trade those. You can long-term this with some options, debit spreads, if you want to be prudent with risk. There's certainly some good alpha to be had here if this pattern breaks and gives us a clean reversal. Worst case scenario, we end up with just a crawl along here and then a breakdown. But looking at the monthly chart, we do have some downside risk. So pay attention here. We may end up with just a rally half back and rejection. Eventually things balance out. But for now, it's a hot topic. And there's a nice pattern on the chart to watch. Don't jump the shark. Wait for confirmation on a breakout. Easy targets to play afterwards. I mean, it couldn't be easier. In the very short term, it's a rough looking one. This has been volatile. Pretty nice primary. Just about reached target on a secondary. If I were to draw this would be a fairly clean measured move. But I'm looking at the bigger picture. I want to see what this reversal is going to do. And we're consolidated pretty tight into a nice tight wedge here. So things are about to do something. Oh, make sure that's not Matthew texting me. Nope, not yet. So also another energy sector piece that I'm looking at is I like to look for, well, who's building this stuff? Who's building the infrastructure? Who's doing what with, selling the shovels and picks, so to speak. And I kind of like NFE. Now, I know I did have a short-term swing on it that worked out pretty well. This little pop here to angular resistance and this one here. But overall, this is one big double bottom here. Very similar to BTU, just a lot slower moving. And so far, it's looking pretty good to break angular resistance here and shoot for at least a short-term reversion, about 1235. Keeping a very close eye on it. Not necessarily jumping a shark. I've got a position in equity in this long. And I'm looking for a possible push through this 1235 target to maybe hit 1580. And then I'm going to start reconsidering. I might take some profit off, leave a little on. Depends on the mood or what the market tells me to do. But that is the resistance level for a giant double bottom. So it's pretty obvious. And then the half back is pretty obvious as well. This is one that we've killed before. It's pretty easy. Got a really nice 2-for-1 measured move out of it off of this swing here. That was the rotation swing. This is a very similar setup to one I found years ago on ZIM. Was that years ago? That might have been a year ago. Similar setup. It was just a sector rotation play, and we knew where resistance and reversion was. It was pretty easy, but similar. And now we're starting to see this energy infrastructure beast start to play out. So we're looking for a break above $10. The plan didn't change. We did get a pullback, but the plan didn't change. Break $10, shoot for 1235, short-term target. Mid-term target, resistance is pretty obvious there, about 1581. I kind of split the difference. I always go to the fib level, ended up being the top of this bar or half an MM, whatever you want to do. And then long-term, yeah, we could see some really big moves. $22 is full reversion of the weekly trend here. And that's a pretty nice target from the bottom here too. If things get really, really juicy in the market, and we know natural gas infrastructure is going to be in demand, at least in the short term until nuclear takes off, and coal is still, under pressure. It's not turning into diamonds, but it's got the pressure. We could see a move all the way up here to 3670, and that reverts this entire trend for a half back. And it's pretty awesome. But look at this. Market structure is here. This is the key level that we need to break to even attempt going there. So this is going to be a super long play on this for possibly years of consolidation. But for now, we can trade call it volatility, but it's really not. It's just a swing trade territory. So there is still a couple swing trades out there to be had. This is setting up to be one of them. Just watch for that resistance break, and we'll see if we can shoot through the $10 bill here and start heading for that 1235 target in the short term. Pretty easy play. There were a couple other things talked about in the heat strategy mailer. Let me pull this up real quick here. And mid-cap defense stocks are all over the news, and some mid-cap stuff is starting to play out. We do have a couple of other things to keep an eye on before we jump into that. And I'll look at TLT here in a minute too, just to kind of give a little bit of insight into what the bonds are doing. We all know that as risk comes out of the market, it tends to find itself into bonds. And some people will long the VIX to protect capital. Other people will just move risk into bonds, park it in a safe place. There's certainly some cash parked in gold. We know institutions were doing their best to take profit at 3,000 just to take some risk off, because gold can still be a risk. It's not just a place to park anymore. It's volatile. It's moving. But when you think about it, gold also has a monthly measured move. And I might have to bring my trading view chart down to see that. Give me 1 second. I'll pull it off here in a moment. First, I got to find, there we go. Let me pull this down real quick. This has been a long-term beast, and I had to add the monthly chart and compress the hell out of it just to make it visible. But here you go. Just a plain 2-for-1 measured move. We broke 1.5. So measured move target on a monthly chart is about $3,100. And that's what I got. I think that's going to be a key resistance area, and we're going to see some consolidation in gold before we possibly see some serious pullback or even a reversal there to maybe give some back. We know that 3,000 was kind of the round number that a lot of institutions and professionals were taking profit at, but we punched it today. In fact, we punched it with some force today. Looking at the 15-minute chart, we got all the way into pushing damn near 350. We got to $3,047 and some change here, and then a big old wick printed out. Consolidation in this range is likely. Yesterday we were calling out a 2-hour chart play. There it is there, that nice 3-bar. And this is an obvious trade. We scalp it from basically base of third bar to fib high of third bar, and that was a nice scalp for yesterday. And then this is often looked at as a bearish reversal or the evening star pattern, but we beg to differ. When it's in a consolidation point of a bull trend, it usually means we've got another measured move happening, and we sure as hell did. So we're looking for that push to about 3,045, and we nailed it. That was just an easy measured move. Blocking this primary to that secondary, pretty obvious. Gold was an easy trade. And that might have been Matthew messaging me. Let me see here. Hey, there he is. Let me get him on the call. Again, bear with me. This takes a moment to go through all the paces here. I love those Discord noises. Sorry for the interruptions there, folks. We'll muddle through. There he is. Hey, let me turn off my video. There we go. Deactivate, activate. Uh-oh, we're out of skew. Full screen. And share screen. I forgot about those steps. There we go. We should be up.
Oh, all right. I see your chart.
And then I got to grid it. And where's my face? Oh, because my camera was in use and I didn't shut it off fully. Aha. Oh, because I made the call. Oh, well, I can hide mine. I'll just be the voice in the background for today.
To see your face.
No, this ugly mug. Come on now. Anyway, I was going over BTU and NFE, a little bit about gold, and then QQQ, and then you had some stuff on the radar for the past couple of days that you've been watching for some relief rally, and we killed it with QQQ yesterday, but now we're kind of in the lurch. So let me drag gold off of here, and we'll get to that. Let's see here. I'll pull it over here.
Yeah, I mean, BTU was great. CNR was the other call name I was on.
CNR?
Yeah.
I forgot about those guys. I don't think I've traded that one in years. Yeah, back here in the middle of last year.
I mean, no reason to trade them except for the short side.
Right. Yeah, that whole trend has been pretty nutty. And we were talking about this.
Trump loves coal.
Right. We were talking about this 6 months ago, and that was kind of like there was a bit of a hype wave there. We had that reversion threat, and then all of a sudden it fell off and ended up getting shorted until we were actually talking about lighting the coal and generating some power. So, yeah, we got opportunity now. I saw it as a double bottom that's not quite confirmed yet. Yes, it's a good long short-term scalp first to scalp back to resistance on the double bottom, but the reversion play is pretty obvious on this one. About $105 is possible. Short term would say about $84, $85. Give us a nice reversal.
Yeah, I mean, I love the AI energy trade. Now that it's sold off, because I don't think it matters whether DeepSeek is what they say it is or not. I don't think it matters who wins the race to AI. If it's here, whether it's Chinese or, American, we still need more power. Right. And windmills aren't going to do it. The long-term answer is probably nuclear. Of course, listen to our Rebel podcast, and maybe it's, 0 point energy. But forgetting about that for a minute, long-term is probably nuclear, but until nuclear comes online, it's coal and natural gas.
Agreed. And that's
I also love natural gas. And if you look, if I look at what I own the screen today, it's coal and natural gas.
Same.
And I do. And a silver miner.
I did take profit before it broke over first, and then I got back in it on that NFE trade. I've been on that for too long. It just keeps giving me opportunity though. But
Yeah.
it's
I
natural
mean, I
gas.
like EQT in AR. Those are my go-tos.
Yeah, EQT is pretty awesome. And it did hit the top of our previous measured move again. It nailed that 5360 target, damn near to the penny. We're kind of looking at, I think, some profit will be taken on EQT in a short term, and then we should see some consolidation, and we'll maybe see it break out further. But I'm going to be playing it safe right here first. So we've already kind of achieved all the bull targets that I want. I'm getting a bit of an echo on that. Sorry about that. So yeah,
I mean, I don't hear anything unless it's on my end.
it might be my end. I don't know. But we're having all kinds of fun today. We've just been swinging around and stuff. Looking at EQT though, I think we got potential to break that high. I mean, if we can get out of 5360 territory, we can start swinging for the moon. Because that can easily set up a giant primary and a secondary way out there. But for now, I'm gonna wait on that one because I know the rest of the market's going to kind of tend to drag and trend. And then we had that huge sell-off on QQQ this morning, and playing support levels with that. I mean, we're critical support for QQQ at like 467 and some change. If we snap that, dude, we got a nice, at least a short-term bear market to go and hit some previous lows that we haven't explored in a while. I mean, all the way down to like 450 is pretty possible. So Q's got some nice stuff. We can scalp it. We can take out every relief rally in it. I went short the VIX going into this, and then I closed the rest of that this morning. Right after I said I had it open, I know people who closed it yesterday did pretty good. And then now it's time to just wait and see what this relief rally gets beat down to the support level and break, or if it holds here and maybe gives us some reprieve. It's gonna be a tough call, but that certainly looks like.
I mean, I'm not seeing a lot of damage today, except for maybe Google, but I think that's even come back a little bit.
I mean, a lot of those big tech equities, I mean, they've been the Mag 7 for so long, they're going to be kind of a magnet for the BTFD crew, I think, huh?
Yeah, I mean, not right now. You look at all of them, it's a straight line down.
Yeah.
I think you've got a complete and total change in sentiment where, people are buying everything but the Magnificent Seven, and they're all getting crushed. And, and I think they're asking the uncomfortable question now about competition, about, capital expenditures, when those are going to be monetized, how are those going to be monetized? Yeah, I mean, eventually you buy the dip. I'm not today, but you look out in the market broader. This morning, I couldn't find anything I wanted to short, and I couldn't find any of my longs I wanted to sell, which is weird on a day where the Nasdaq's almost down 2%.
Right. And it's going to be kind of like that. I mean, we see where the bear flag is. It's threatening to break lower, but it can also consolidate and give a relief rally back to as much as half that previous bear trend. So, I mean, it's an area to definitely be careful. I was mentioning earlier that buy and holds should really be looking at that heat strategy, as well as if they've even got a remote understanding for how to trade options. Collars are going to be like the hot ticket right now. And I know JPM is notoriously famous for setting collars at specific levels, and I haven't looked at it in a while, but I would assume it was probably right in that level where things were just teetering on that support level. So I bet it's probably no more than a strike or two out of the money at the moment. So just speculative. I haven't seen it. I have to go look at what their actual collar strategy is, but I just trade volatility, man. I don't have time to dig into that crap. But anyway, NVIDIA was one that I'm kind of keeping a very close eye on. And in fact, I am in an active wheel trade on NVDX. And I'll keep putting alerts out to everybody I know as I can. Sometimes I don't get a chance to do that. It moves so fast. So watching NVIDIA, the only thing I can really say is there's a good possibility with this descending channel I have marked out here on the daily to bounce off of this regression line and maybe give us another relief rally, or possibly even a break of resistance at like 122.50, and maybe shoot for that 127, 128 target. But gosh, we just have to wait and see what happens with their major presentation coming up. I don't know what day that's on, but I know it's close. Was it they have some sort of show coming up where
Today.
Is it today?
Yeah, today.
I'll be damned.
Yep.
See, I don't charts so much, I forget about the other stuff. That's a dangerous thing to do, but the charts are, for me.
Is. You got to know the catalyst.
I'm on short-term stuff so much that I often forget to even look at that stuff. The only time I really pay attention is when there's like, a indication that JPOW is going to step to the mic or the Fed's going to do something. But other than that, it's like, gosh. But I do like the volatility, and the chart told me, hey, there's support down here at 115. It is a reasonable time to take and sell some puts down there on NVDX. And of course, I took it and walked it up, sold some calls yesterday. Those puts are still open on NVDX at the 350 strike. Oof. I had three distinctive wheels on now, and sometimes I lose track of them, but yeah, pretty obvious trade. Now we're looking for this LZ kind of felt right to the point, back to B, and now we're consolidating over, testing probably a half back about 895 on NVDX, and then we'll see what the outcome of that show is. I mean, if it attracts some investors or brings in some new money, maybe we get NVIDIA kind of looking like a Greek god holding the globe up again, because that's a very strong probability here.
Yeah, could very well be.
And I know that we talked about a lot about quantum computing and space tech, and then we got into your up and coming UFO. We got a total nerd fest on the Rebel Finance podcast there with our friend Lior. My gosh, there is so much writing on that, and there's so much opportunity, and it's hard to see where to get in, but there are a few charts to kind of keep an eye on with that. And then you got NVIDIA, and then you got quantum computing. That's going to be a big boot too. We're so much on the cusp of that. It's like, we could taste it. I'm getting excited, and that's just the nerd in me doing what nerds do. But now I'm also kind of paying attention to the fact that there's a bit of stuff to play into for maybe catching a thematic hype wave, so to speak, before it happens, similar to what we do with the nuclear sector. And I'm trying to remember, is it LUNR? I kind of like that chart. LUNR?
That's one, yeah. That's one of the names.
And I'm waiting to see if there's maybe a chance of a reversal here. We've kind of hit the reversion. We're just under it. Short term, we're looking at key support. There is a gap to be had here that hasn't been, filled, so to speak. So there's still that threat on the daily chart, but it's looking like we could reverse here. And reversion is pretty nice percentage wise. It's 100% gain up to like 13.50, damn near 100. $14 is twice 7, so that's a very good possibility if this becomes a bit of a hype wave. And watching this is a very crucial looking setup here. It's currently looking like a bear flag on the 2-hour chart, and I know where the critical support is, and I know where that gap is. So we got some bear targets, but if a bear flag fails, usually the shorts get their faces ripped off. So looking left, there's your volatility. That was a huge drop really quickly, and this is also going to appear on some time frame as a gap to fill and a reversion target is also there. So be aware if this bear flag fails, and it can. The critical support's pretty obvious, about 635.
A HELOC isn't the only way to tap into your home's equity. In fact, a home equity investment could be a better option for you. A HELOC is a line of credit from your home's equity and typically requires an extensive application process, has strict debt-to-income requirements, and comes with unpredictable fluctuations in interest rates. Not to mention, you'll be making monthly payments. A home equity investment from HomeTap, on the other hand, also gives you access to your home's equity in the form of cash so that you can use it for whatever you want. A home equity investment is not a loan or a line of credit. Therefore, there are no monthly payments and you have up to 10 years to settle. Home equity investments can also have less stringent qualification criteria. For example, there's no debt to income ratio requirements and more flexibility with credit scores. For more information and to see if you qualify, tap this link.
When I tell people she's 21 years old, they're just taken back. Without a farmer's dog, I truly don't believe she'd be here today. She just started slowing down. Didn't want to get up anymore.
She ate sometimes she didn't.
I thought she always had a low appetite. I bounced from food to food.
So we came back, gave back half, and now we're finding liquidity here. The liquidity is already there. So this might be something to jump into. Long or bullish target for support hold at 1815, which is pushing 1830 now. Quick fib target's also obvious into the pre-market time. They're about 19 bucks. So you could get a pretty good little short scalp out of that for day traders. And then looking even further left, I mean, this is a fairly fresh IPO, so we don't have a whole lot to chart with, but you go and track this entire part of the trend here, and we get a little bit more than that. About 1945 is a bull target for a reversion of this trend here. So it's got some good short-term price action. And if you get an upgrade, did he put a price target on it, or did Oppenheimer? I always say he.
I don't think so.
Yeah, Oppenheimer is a name that my nerd goes to, like the Oppenheimer. I would almost say that I can comfortably say that the halfback target is pretty obvious. As long as we resume bullish momentum here, I'd say prudently about 1935 to 1940. I'll bump it up to 40. And then I'm a little skeptical when it comes to a fresh or fairly fresh IPO like this, and then especially when they got a secondary offering. Not like they were in threat of being delisted or anything, but the first thing that the manager here is going to say is, should we be looking for some slight dilution here to maybe build some more growth capital? That's kind of on the thought list, you know. If things get super bullish, and I always kind of keep an eye on penny stocks that do this too. Whenever you have something that's been crawling along for a while, you get a short squeeze, look left to see if there's any previous reverse splits, but typically those reverse splits will happen after saturation or after soaking down. So they'll go and come out with a mixed shelf offering or something and sell a bunch of new shares, and then they end up catching the top of that short squeeze and getting as much premium as they can for that, as far as getting the best price for those shares that they sell in the market. And then they'll let it melt down again until the NASDAQ starts threatening them with delisting, and then they'll reverse split it and rinse and repeat. Don't see that here. We just see earnings, and it's a fairly fresh IPO. The fact that they're offering this early, that's actually a good thing. So they're really strongly focusing on growth. And that speaks to me where I can see some price action plays to be had, but for long term, this might be something worth holding for a little while if it holds this level. 1940 short-term target, and I would say if things get really swifty here, we could push to like 20. That's just half of this entire trend here. So I'll set those two targets on there. I'll leave the dope on my chart, and we'll go with that. And we were really right about something. We talked about.
You're really right about everything.
You know, you're not wrong. When we talked about Hood the other day on the Rebel podcast, dude, we were dead on with that 42 target.
Wait, we talked about what?
Hood, Robin Hood. That was when we
Oh,
had.
yeah.
Well, it was Patrick brought it out, and I'm like, hey, let's look at that. And I started talking, mumbling about the chart, and I realized, oh yeah, I got a target of about 40, 42 on that. Nailed it. This is a dopey chart. I have more lines on it than a 70s coffee table, as a friend of mine would say. But we're right in a consolidation level. It's previous consolidation level, pretty obvious. It even melted through that a little bit. We got down to like the 35, 36 level. But since we've talked about it, it's done everything we wanted for a pullback. And we might be starting to possibly look for some longs here if things stabilize. We've got a miniature measured move here, and the 2 hour would show this primary, secondary, target met, half back done. Now we're testing previous high for support. If things get pretty good here off the $40 bill and starts to break resistance, look for short term half of this little day trend back to hit this angular here that I have in play, about 41 and a half, 42. If we break 42, pretty obvious reversion. We could see, 48, 49, maybe even a skosh towards 50 is possible in a trend here. For now, it looks like a quick liquidity grab. So let's wait and see what this does. We know where the breakout levels are. If that fails, just look for a return to the low or the mean. So, 36.50, possibly 34.20. Definitely start watching it. And trade a break. Don't trade the setup. Trade the break. It's coming. Definitely want to watch. There were a couple other things we had talked about recently that played out almost exactly as we said. Let me see if I can remember which one it was. It was quite a few. We got time to dig through a few. First one was Tesla.
Yeah, I'm going on Schwab Network today at 2:45 talking about Tesla.
I think I might want to tune into that one because we tapped pretty damn close to that critical support area, which was that low we were talking about, the bear target, and it definitely ate that gap up like it was catfish, man. I love catfish. It nailed it. Now we've got this ominous pattern that sometimes we talk about for day traders, and it works for swing traders too. We call this the H pattern. It's generally just a double bottom, but it's got a little bit more exuberance in the previous high, or what I call R1 for resistance. So L1, first low, R1 is resistance, first high after the first low, and then L2 is down here, and it found support. If we see this reverse, if we suddenly find some new money chasing shorts covering here, we could easily get a very fast squeeze and rip to like 290. I'm not going to say anything really good about Tesla in general, but everybody forgets that it's not just a car company. The car side, sure, the EV mandate's been kicked down. I can see potential for what's next. And I know that Elon probably will resist very, very harshly a step into going into hybrid technology, but it's not beyond possibility. I almost kind of sense that maybe that is the next step, because EVs just aren't quite there yet, but hybrids are, and they've been there. Plus, they have a strong partnership with Toyota. I love Toyota. Keep an eye on this thing. We could have something come out that might just speak to that level. And don't forget, he took a trip to Toyota's research and development facility and was shocked when he came out. Didn't really say much, but he said, in his words, they've got something that could very well destroy the EV industry. We'll see. But I think that if I were the CEO of Tesla, I would start leaning towards hybrid as much as I would begrudgingly go to it. If it's a car company that I must save, that's what I would do. Not to say there isn't something behind the scenes that might be even better. Battery technology is another thing that's kind of on the cusp of a breakthrough here, where we've got pretty close to commercially viable or reliable solid state battery technology coming out. So maybe that might lean into this, but combine the two, and you really got something. And I talked about that, years ago with Toyota. If they were able to marry advanced battery technology or solid-state battery technology with hybrid, especially if the internal combustion engine ran on an alternative fuel, they would absolutely destroy everybody. There would be no market for anybody until they caught up. And Toyota and Tesla are both companies that have the power and the means to, kind of get into that stuff and innovate quickly. The old saying, adapt or die, is not just an adapt or overcome thing. It's you either adapt or you go down in flames. And Tesla's right at key support. Things are hanging in the air about that. I would probably start telling people, take a deep dive into Tesla and realize it's not just a car company either. They've got potentially a whole robot commercial workforce, or not commercial, industrial workforce. Imagine factory workers getting replaced by autonomous robots. That's what they do too. They make those. They're developing that. They did hit a big hurdle recently, but I think they'll overcome. Don't lose sight of Tesla. There's still some alpha to be had in that eventually, and I think we've got pretty key support levels in place. It's possible to run here, or maybe even give us a reversion trade. Pay attention where it's at, though. It's going to give us a pretty good short-term trade soon, even if it breaks south. And then in the long run, we've got lots of reversion targets to get back to that are possible. So give it time. Have confidence in old Uncle Elon here. We've got a lot to keep an eye on with him.
So a couple of things there. Number one, I think you said the most important one is that Tesla's not a car company. If you look at the future of where AI is, it's not, typing something into ChatGPT and getting an answer. It's the physical AI, which encompasses full self-driving. And I think I saw him on a podcast yesterday where he said 5 years from now, half the cars on the road will be self-driving. In 10 years, I think he said 90%.
Wow.
The other thing is robotics, which they're in. And you also, if you look kind of at Tesla, the times to buy it is when nobody wants it. And the times to sell it is when it's, going parabolic. I own puts on it. I sold puts on it, sorry, because I think, Trump has a Tesla put, because I think he knows if it goes down too much, Elon's going to have to, make a choice. I would not bet against Elon.
No, I never will. And that might be a good idea. I might let me go look at TSLT. I know that you've pretty much cornered the market for me when it comes to leveraged ETFs. And now we've got volatility and volume enough in them to make the options chain worth wheel trading. And I love leverage. I love low outlay, and I love high premium return. I might be considering selling a put on TSLT here, just personally. That's right at the floor. I really like it there. Good idea. And already made some changes in my NVDX position, and the only one I'm waiting on is MSTU, but I've still got lots of plays in that. My MSTU cost basis still has a 350 put open with a cost basis of $3.25 on a position I started on February 28th. That's impressive. So I will definitely be capitalizing on this volatility, but here we have, again, that same pattern that I look at. We call it the H pattern, and oftentimes these lead into a very, very volatile short squeeze. So if something good comes out of Uncle Elon's mouth, or something great comes out about the company, or whatever, a breakthrough, who knows? Could be anything. That's the time to watch it. And they can fail. We've seen it here. Watch where support is. We know where the key support is. We know how to short it if we need to. But this is where that potential for a short squeeze really is. So definitely keep eyes on Tesla if you are a day trader and possibly a swing trader, and you might see some alpha there. So again, don't jump the shark. Just watch. Keep an eye on it. Be patient. Pull a Warren Buffett. If you have to sit on your hands, definitely a good time to do that. This is definitely a good time to be careful in the market. But this opportunity is slowly adding up. Something will happen soon. Just be patient. What else we got to look at? I had another one lined up and I couldn't remember. Oh yeah, PLTR. That was a nice, glorious bounce. I'm kind of sunk on it though for the next move.
It's below the 50-day. It could go either way here.
And it was a pretty easy play off that key pivot for the reversion trade down to 75. I shut my long down yesterday on it, at like 87 or 86 and a half.
Yeah, I'm short puts, so I'm not long calls yet.
I think between this and what's the other one? Workforce?
What other one?
What was the ticker on that? WeWork or whatever it was.
WeWork went bankrupt.
Oh yeah, that's right. There was another one. Dang it. It'll come to me. My brain's kind of melting down already. But long story short, PLTR and a couple others that we've been watching are just starting to look a little choppy. So I'm just like taking my cautious exit out of it and I'm going to wait. But look at the 2-hour chart. You kind of get into this consolidation and you start playing mid, low, high. We've got the low in here and we've got the mid. We've got the high that's kind of consolidating a bit. There's kind of a barrier here right at that resistance level. And I'm just going to mark it from pretty much this bar back here. And there's resistance. So it was pretty prudent to take profit there and wait and see. Now we're looking for half back this trend. Well, we just hit that this morning and we suddenly found some liquidity. We found some buyers. So support currently about 83.50. Resistance is about 87.50. And we could go either way. We're right under the 50-day. Let's see what happens. This will either turn into a bear flag or a reversal. It's pretty much a wait and see. And then again, I always say if you're a trader, don't trade the setup, trade the break. That's the prudent way to do this. Yeah, you'll leave some meat on the bone. You might even leave some money on the table, but you'll end up, having a little bit more probability of being profitable if you just patiently wait and trade the break more often than not. Let me see. There was a couple others to go over. I'm all over the place today. Takes me a minute sometimes. There was one still interesting to me energy company that I don't think enough people are looking at. And we've been trading it off and on here for a while, but it's just kind of, I don't know, the shine's not off the apple, but it's definitely got some plays here. And I'm seeing this really nice broadening pattern contract on the end. It's that lovely diamond pattern I love to watch. And it's right in a reversion area. So EOSE is the ticker I'm talking about. It's an interesting company. It's got market structure, written all over it. If you zoom way out on a weekly chart, you can see the hype wave and the consolidation period is over. We're watching for where the trend would begin here, and it did poke out of resistance. It threatened to hit that $8 target for reversion, and then it rolled over, gave half back, and now we're on key support around $4. So keep an eye on this one. This one might get interesting. And these guys, I think they do energy storage and stuff like that primarily. I'll have to look at the profile on this company, but chart-wise, it's looking like we could give a nice bounce out of here and continue to trend. Again, we know where the key resistance is. This zone. Sorry. Oh, bless you. This zone here is kind of like just a reversion of this play here.
Sorry again. Now my dog's gonna freak out.
Yeah, I've had that same issue earlier this morning. Well,
you're on TV.
It's funny. I had one of my dogs started sneezing like crazy after I had a sneeze attack. So the allergies are just going around. but it's almost like contagious, like a yawn. You do it, and everybody else in the room does it.
Yeah.
Same with dogs. But yeah, I'm looking at this key support area. I think this is an interesting company. I'm not going to pull a Kramer and say, buy. I'm a buyer here. No. Just watch this. This pattern breaks. We got opportunity, and market structure is definitely pretty much in a good place with this. And we could see some good alpha here in the long run. And then look at the size of this trend. I mean, that's a big percentage swing. It's a penny stock, yes, but you start looking for long-term reversion. If this thing breaks out of this, we've got a pretty nice shot to $8, and 1050 is pretty prominent too. That's about where it IPO'd at anyway. So definitely don't take this off your radar. It's an interesting company, and I kind of like what they do. Comparatively, not Plug Power, but I'm gonna look at Plug anyway. This is what you don't.
I'll give you a nuclear play that I really like is BWXT.
Okay, let me get that on there real quick. But you can see market structure pretty much gave up on Plug. So let's have a look at BWXT. We love nuclear. Oh, hey, that gave a nice support test right to 95. We had a key support level mapped out there, and it was just base of our measured move that we hit the halfway mark and rejected. This was a long play, or a long time ago we played this. Now we're back at support. I kind of like it here. And half back previous resistance is going to be about 104. And then full reversion is like 111, 112. That's a good play to watch. Definitely trade the break and not the setups thing on the daily chart here, but we're at a pretty good place under the 100 or the 200 and on key support with a bounce. It may give us a little bit of a reversion back to like 97 and some change, and then find support there to test it and continue. But it's overall a pretty decent stock and halfway decent dividend. Might have some interest. Looking at about 112 for full reversion on this trend. I'll have to remap some of these old measured moves, but I'm not taking the big one off. I remember talking about this a while back, saying that was a beautiful measured move. And I always also say, write down that half and whole rule on a Post-it note, stick it to your monitor. It made a beautiful half measured move and beautiful play in a reversion. This is a fib reversion at 73.6 or whatever fib level of the previous high. Easy one. Now we're at support. That's a pretty good place to be. I'll definitely keep this one on the radar. I'm going to add that to the long-term watch list, and then we'll revisit that when it comes out. And let me double check something real quick here. I just want to make sure there's no comments on YouTube to answer here. All right, well, I think that's kind of where we're at. Just it's a time to be careful in the market. We've been saying this for the better part of 6 weeks now. We kind of knew better. We'll have to be patient with swing trade stuff. So the watch list, we try to be very accurate. And the stuff we do call out for price targets, we still hold that standard. We're really accurate. We're very, very much right most of the time. And when we say careful, we mean it. We're not just trying to pussyfoot around things here. We are going to tell you when we see a good setup, and we're going to tell you when we don't see a good setup. And that's just how it is. So it sucks. It loses some entertainment value, but at the same time, it's beneficial to be aware of these things in the market, and take a wider look at things, and watch patiently for the opportunities to take trades. I've got one more for you. I think you were absent that day, but I presented the mayonnaise index.
The mayonnaise index? No, I don't remember that.
So the whole egg crisis, everybody's like complaining about eggs being like $6 a dozen, and I don't blame anybody for that. I deal with that myself. I look at things where I find a company that produces all those eggs, and I see that they're bearish as hell all of a sudden for a nice pullback. And CALM, Cal-Maine Foods, is one of the biggest suppliers in the U.S. Well, for the Eastern Seaboard anyway. And it was pretty obvious, around mid-December, the bird flu came out. They had to, take out a bunch of their birds but typically it takes about better part of 5 months to bring a chicken from chick to egg producing hen, unless you got some really potent hormones, which they do use. It maybe shaves a few weeks off of that time span, but they still got to mature to become an egg-laying hen before they lay eggs. It's just genetics. I was predicting like mid-April to be a swing, but we're starting to see some reprieve in this sooner than later. We're pushing towards the middle of March now. We're starting to see some consolidation on support. Still looks a bit like a bear flag. Short term, we were able to scalp it, but I'm watching this key support area right around 89 to 90 bucks. And if we hold here, we may go and start looking for reversion on this trend. But look left on this thing, dude. It's been pretty positive for a long time until this happened. This is our parabolic push on the monthly chart. Weekly chart, you can see it too. And this is a key support area right around 76.40 is where I mapped it out for. I would expect it to be there in mid-April if it took that long to get birds to produce again. But then we recently see the price of eggs coming down. Well, when the price of eggs comes down, demand goes up because eggs, everybody loves eggs, including Unilever, which is a major manufacturer of mayonnaise. So I call this the mayonnaise index. Let's look at Unilever. Unilever is a little more nimble. They're able to adjust their margin and take quicker action in their pricing when it comes to their supply lines. They can act appropriately. So Unilever gave us a pretty good setup for support. It gave us a nice half back on the trend. And it's a little dirty. It's not the most appealing chart that I would trade typically, but that half back was obvious. It hit it in January, hit it again here in mid-February, and boing, right off the floor, and picked up right into a reversion target here on March 10th. We can see that there was profit taking right there. Easy reversion. So with me calling it the mayonnaise index, you look at these two major parts, and a minor part's going to be creameries and bakeries and stuff like that. And I could come and
Kramer or creamer?
Creameries. Like ice cream producers.
Yeah, we should probably have creameries too.
Probably. You gotta juice that guy into something useful.
Yeah.
But we have the reversion done. Now we're pulling back. We're probably going to give half this trend back. So to call this an index, you got to have a kind of the tripod effect. The company I chose for that, and you'd be surprised how many eggs they do use, Hershey's. Not few people realize Hershey's does produce some creamery products as well as chocolate products, and obviously, milk chocolate has milk in it, and you got to use a stabilizer, which is typically going to be egg-based. There's some use of it in their candy, but primarily it's going to be in the creamier products. And we have Hershey's looking fairly bearish here. So if you look at the weekly chart, we got a big primary, we got accumulation. We hit half a measured move down and bounced. Now we've given back to the mean of this consolidation and resistance, and we're half back on a short-term bull trend that bounced off of the support level here. So I'm going to keep an eye on these three companies, and I think when they start doing good, the mayonnaise indicator will indicate, hey, the economy might start doing good. Two things in play here. We got Trump saying we're going to produce more energy, which drives down the price of energy, which is beneficial for everyone. You can't have a booming economy without affordable energy. And then there's food, and eggs are in a ton of food. So pay attention to that index. When both the energy sector and the egg sector or mayonnaise index are starting to do good, I can expect the economy to kind of follow. Just me. Sure, you can pay attention to beef, pork, and poultry prices as well and work with that as well. But generally, beef is kind of came up to a high and stayed there for a while. Poultry kind of floats in an area that's not really high or low. It's very well controlled. Pork is always cheap, and the really only thing you really keep an eye on is if chicken prices start moving with volatility, and we have had that volatility recently. Families have got to trim the budget somewhere. And if you are not feeling so economically inspired right now, you're going to probably either cut some of that out of your diet and find some cheaper foods. Same with energy. So paying attention to the mayonnaise index could be a good indicator of if we're going to, make it out of this economic.
Why is filing your taxes with Free Tax USA different? Well, for starters, our premium federal tax return
on the mark.
Nope. Just keep an eye on copper. Freeport. FCX.
FCX? I can do one more.
FCX.
Yeah. At Freeport McMoran. Yeah, we talked about copper a little bit in the Bullish Bears community, and keeping an eye on that. That's a good economic indicator as well. But then we look at the producers. FCX is mostly in production and refinement. Short-term reversion target is pretty obvious, about 43.37. We did have this bearish setup on it before, which we nailed, by the way. Right down to 34.50. Even exceeded it just a little bit. That easy part's done. Now we're looking for reversion. So a break of resistance of $40 would send us to about 43 and some change. Let me squeak that pivot up a little bit. There we go. Right between the moves here. 43.50. Pretty obvious reversion target. And then let me look out a little bit more on the weekly chart. After that, it's where we're going to see what the economy does with things. And we know that when economically things aren't great, metal prices will spike. Look at gold and you know exactly what I'm talking about. Copper is a good indicator too, because this is more useful in short-term market space than gold is. I mean, everything around you, I mean, the computer I'm looking at, everything uses copper, some gold, but mostly copper. And electric vehicles, infrastructure, tons and tons of things with copper. So yeah, it's bullish for the moment. I kind of like the setup here. If we bounce out of this resistance level at about $40, we got a really good shot at hitting that 43.50 mark pretty quickly. And that's just half back of our bearish target, which again, we nailed. I'll break my arm, pat myself on the back for that one.
There you go.
That's a good way to wrap. I think we're in the mix on that. So again, be cautious. It's going to be some stuff to step over before you get to the good stuff. So we'll be on the watch for it. If we see any good alpha out there, or good swing trades to be in, or good themes to follow and trade, we'll definitely let you know. And in the meantime, we get into some in-depth stuff on the Rebel Finance podcast. So be sure and catch that on Thursday. We'll be on at the same time, 11:30 live. And we have a really good time with that, as well as it's becoming pretty successful already.
And we're getting views, yeah.
Yeah, we're out there around the 1,500 view mark on the last couple episodes. And
Joe Rogan, watch out, man.
Yep. Well, maybe we can get Joe Rogan as a guest sometime. That'd be cool.
He asked. I told him we're booked for the next 2 months.
Okay. Well, we'll keep him in the loop anyway.
Yeah, definitely.
Right on. Well, thanks again, everybody. Have a wonderful day, and we'll see you again on Thursday. And then, just be cautious. Don't go jumping and chasing. Chase is not a trading strategy. It's a bank, and banks make your money. So, yeah.